And good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Wednesday, May 24th, 2023. All seem to be on track that a continuation to the downside was definitely in place today, that we likely had seen the highs, we'd likely had seen the completion point for primary wave B. That remains the case in the S&P, actually. But here in the NASDAQ, as you remember yesterday, I had left open that potential that we could continue to drop down and still had plenty of room to drop down before wave 4 would interfere or cross over into the price territory of wave 1. And so what happened today? I had left it open for a couple of reasons. One, because the wave pattern kind of was suggesting it. Two, because I knew we had NVIDIA's earnings coming out today. And it had been, pretty rumored that they were going to do well and that they're in the artificial intelligence space, et cetera, et cetera. So something out of the ordinary could come. And I have, just from my history with NVIDIA here in the NASDAQ, its tendencies are to basically sell off into earnings and then blow the doors off with earnings. And that was the follow through today as they come out with their guidance and talk about, AI demand. And I guess they have some chips. They've got whatever they got going on for artificial intelligence seems to be working. So they've increased their revenue projections, et cetera, et cetera. And the stock, which closed at 305, now is trading at 365. So what does that do for the NASDAQ? Well, again, this is all just got to stay in a work in progress here. As we continue to move through all of these different scenarios and what's happening that's creating them. And I'm going to show you the difference because basically I was being asked yesterday, do I think that the NASDAQ isn't done, but the S&P is? I said, no, not necessarily so. But I have to include it. And today I'm going to show you how that could stay in place even with NVIDIA's stellar earnings and forecast. So if we're to look at it here on the NASDAQ, and I'm here on the hourly chart, I have no changes to make prior to this, that will remain in a minor 5. That could have been over right there. Could have been over right there. The NASDAQ has continued to make higher highs as it moves up to complete this minor 5th wave. And in turn, the intermediate C wave, and in turn, once again, up to the next degree to a primary B wave. So just putting into place that the 4 is here, even against the wave 2, it is pretty big, both basically putting in irregular patterns, not outstandingly irregular, but still where the middle section, the B wave of the wave 2, popped to new high above the high of wave 1. Here, it popped above the high of wave 3 in the 4th wave position. So we're getting kind of the same type of moves in both. So we don't have that rule of alternation and all kinds of things that are kind of coming in. But I'm going to continue just to talk about the fact that so many things with algorithms, with everything that's kind of going on and quantitative trading, that I've seen 4th waves, 2nd waves produce more irregular sections, and then just kind of continue on when you're kind of not necessarily falling for the head fake, but are including this head fake into, oh, that might be a done deal, and now we're reversing, and then it ends up not being so. Leaving that in place, if indeed this 4th wave here, that I'm marking at the 4th wave at today's lows at 13,570, if that indeed is going to be the completion point for wave 4, and now we just reassess minute 1 to minute wave 5. Okay, so what have we already reached? We've already reached 0.618, where minute wave 5 would be equal to 0.618 of minute wave 1, and that's right here. But unfortunately, it's not moved to a new high. So if we had to consider what's going to get it to a new high above what we've already seen, and we would still use this level at 13,960, and also you can use this level, 13,979. And first thing we go to is that minute wave 5 would be an equality with minute wave 1, and that level is 14,002. 14,000 has been hanging out forever as being a point that the NASDAQ is going to get to. Well, they may just do that now. And it could be done very quickly and still be totally rejected as we barter around with the debt ceiling conversation. And it is now becoming more apparent that it's not going to be able to get through both houses of Congress in a legislative process and be all signed, sealed, and delivered to the president by May the 31st or by, June 1st. So we may still fall into this default, let's not get ahead of ourselves. There is no agreement yet. We're here progress, we're talking, we're doing this, we're doing that. Oh, we're at a great impasse, et cetera, et cetera. So all of it's still out there. We're still getting all of the reactions that we get. And today was a little bit heavier to the downside. Now, I will tell you right off the bat that in this extra hour, which will be completing in about 1 minute, the bond market has decided to give up everything that it was putting up in gains today. If the 30-year bond is going to be closing towards the lows of the day. Now, that's the bond market and the notes and everything in the treasuries. They continue to react to the possibility that we're going to have a liquidity drain, that we're going to have all kinds of things going on. And the fact that if you're looking at the T-bills that are really going to be for June the 1st, they're well up over 6%. So interest rates are hiking. Interest rates are going up. And there's a lot of things involved in that. That if we truly want to believe that the government, the federal government, is not going to default on their obligations, they may delay the payments. But still, if you're willing to take a T-bill that matures on June the 1st, so it's a 1-week T-bill, and you're looking for it to mature on June the 1st, well, you can get over 6% on your money. So they were lining up today to get that. And it's really on the basis that it's like, yeah, we believe you that you're not going to default and that you will make due. It might be a delayed payment, but all this is going to work out. But that doesn't necessarily settle anything else, because what we can put into that conversation is that if we reach that settlement, and even though the actual putting it all together and getting it legislated will take longer than June 1st, that they can still possibly come in and start putting out auctions and getting things in line on that agreement. The traders, investors, everybody that gets involved is going to step forward to buy these issues, to buy this new flood of debt, but they're not going to do it at these lower rates. They're not going to do it. And that's what I think the bond market is telling us. You're going to come in and you're going to need a whole bunch of money because we got to pay our bills, and now we don't want to get behind. And if we do, we got to pay what we're behind on, plus what's coming up. So a lot is going to be offered out. There will be a significant liquidity drain out of the equity markets as this gets shifted back to be put back into bonds at much higher rates. And it could be for the short term. It could be for, whatever the term is going to be. So I'm thinking a lot of the shorter end of the paper, shorter end of the curve. We could see that the curve kind of really widen again. Again, not good for our markets. Now, that could be with an agreement. So there's still a lot out there. But right now, I'm looking at the NASDAQ. I'm looking at this gigantic rally. If they don't turn NVIDIA lower, and start bringing it back down, which they're not. They're just continuing to run it right now. Now trading 371. I mean, this is pretty cool. I mean, they're up at all-time highs. I mean, good for NVIDIA. But, and quite frankly, it's pulling up AMD, Microsoft, and Micron. So everybody gets to participate. Everybody gets to jump up. If you have anything to do with chips or artificial intelligence, which we know Microsoft is a biggie over there. I mean, Microsoft's up $6. That's all going to pump up the NASDAQ, folks. It's going to pump up the Dow, and it's going to pump up the S&P as well. But it's going to benefit the NASDAQ the most because it carries the heaviest weights here. Couple that with NVIDIA, and you've got a recipe for get out of my way. And Palo Alto, I know I can't even remember the balance of their title, but they reported today, and they did very well, and the stock was up substantially. So we're still getting earnings reports that aren't bad. Now, whether they're sustainable, who knows? But artificial intelligence, as everybody thinks, it is the brand new, it's the new sector, and it's going to run. And sure enough, this is what we're going on. Okay, so putting together minute wave 5 to minute wave 1, what does it give us? We have equality at 14,002. We have the 618 at 13,837. If it finishes there, then I'm still going to put the 5 here, and this is a 1, and this is a 2. But I'm going to give the benefit of the doubt, leave the 4 there, that it's going to continue to move higher. 14,002 is 100%, and then the 5 can go there. If it continues to go up, our next level is 1.618 is 14,273. Can it get there? Well, I can't say no, folks. I can't say no. This all in the face of what we got going on with the debt ceiling, with the banking sectors, with everything still brewing out there. We might just see the NASDAQ, or maybe a few of the others, still be able to push higher based on a fraction of what the markets will need to focus on. Now, am I looking for 14,273? No, but I think that jumping 113 points from being down, right? NASDAQ was closing down and now finishes up in this little after session, 113 points. That's I should have follow through. And to be honest with you, folks, all we need to do, again, is to get ourselves about 13,079, 13,979. And that's a hop, skip, and a jump to 14,000. So it's all there. Over in the S&P, and quite frankly, it moved so fast that it didn't give a chance for anything but the 8 and the 4 to react. The 20 kind of turned, the 50 still heading down, and the 200s are flat. So a lot going on over there. We'll see what happens overnight and as we open tomorrow. Now, here in the S&P, I have put the 3, the 4, and the 5 in place. 1, 2, 3, this could be a 4. And here are your resistance levels for a wave 4. Most common, we have 0.382, and that's 41.55 right there. Above that, we have the 50, the 200, and the 50% marker at 41.68. Where cannot not break above? It can't break above 41.87. If it does, then I'm going to have to switch around the count again. And whether this is a triangle, I just don't see it anymore. I don't see it because of the depth that we broke down today. It was very close to coming right below the lows of wave 2. So it's a very, very difficult picture that the S&P is presenting for us. But I'm going to leave it into this fashion right now, which allows for this a little bit higher. But I think that then we put in a 4, and then we start to come back down, and we do finally break 4,100. That's where I'm going to leave it for right now. Now, tomorrow on Thursday, we have, let's see what we have, if anything, in terms of numbers. We've got weekly unemployment. So we have that. And let me just double check on a couple of things of what we've got coming in tomorrow. And seeing, let me look at this calendar. On Thursday, we have GDP and Jobless Claims, both coming at 8:30 a.m. Eastern. We have Chicago Fed activity. We have pending home sales at 10. We have a Fed Governor, Thomas Barkin, going out at 9:50 a.m. and starting to speak somewhere. So we do have a couple of things. More important, GDP and jobless claims, they come out pre-market. That's where I'm going to end it for today. Our next update will be on Thursday, May the 25th.